what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Oh my goodness, are we live? I don't even know. I think we are. Whew. Okay, good morning, everybody. Sorry for the delay, but welcome to the morning show. We're back. At least I'm back. JC, I'm not sure. Steve is here. Guys, if you missed yesterday's show, go and watch it. Steve and company. It was Patrick, it was Grant, it was Sean. Who am I missing? Alfonso. They crushed it yesterday. So go back and watch the replay if you missed that. As far as today's show, we'll be joined in a few minutes now by Eddy Elfenbein. It's going to be fun because Eddie's always a blast. So we'll have that going on, and then we'll see what's going on. So good morning, and let's go.
Well, hello. How nice of you to join us this morning.
Oh, thank you. I appreciate that.
You know what the nicest part about this is? The chat was just so patient. They waited for us.
I know. Aren't they the best?
Really are. I'm thinking, nothing could ruin my day today. When you are patient and you do the right thing and you trust the process, sometimes, especially in bull markets, you have really good days, right? A lot of times it's the CPI stuff is a catalyst for some big stock market rallies. I think some people are going to be having some really, really good green days today. If you look at this,
what's so special about today? Just out of curiosity.
I mean, home builders are up 3% pre-market. Regional banks are up 2.5% pre-market. ARK is ripping. The Bollinger Bands in the Russell 2000 are the tightest they've been since before the pandemic crash. So 4 or 5 years. Volatility has contracted to such a tight range. So whatever whatever direction that range begins to resolve in should come with a pretty swift move, right? From volatility contraction comes expansion. That's what's going on with small caps right now.
Yeah, but isn't it true? Like, I feel like every time you get this volatility contraction, people are just, what you said, I guess, is more right. But in reality, the sentiment is like, oh, but just wait till the explosion, right? It's going to explode.
Yeah. A lot of times it does. That's the right idea. That's the right way to think about it. Where people mess it up more is what direction it's going to explode in. Because that volatility contraction tells you nothing about what direction
it also doesn't tell us about anything about how long it would take, how long it could be, right?
I got charts and we got to talk about them. You got some news. We got some movement in cryptos here this morning as well. We had Powell pumping the banks the last 2 days.
Can I make a confession? I bought the other day. What's today? Thursday. So on, I think it was Tuesday. I bought myself some Jumia.
Good. About time.
Just a little bit, a little sliver.
The Joe Mama, did you bought into the 30% up candle?
Yeah, on that whatever day that was the day that I bought it, and I caught most of that move of that day, I might add.
Well, that's how you get candles that look that way. There's a lot of people doing what you did that day. Like,
I know.
I gotta buy it.
I feel guilty. I feel guilty doing it, but I did it.
So the Jumama, Phil Blotsky, great question. That's ticker symbol JMIA. Grant will not be coming on, Harminder. That was a rare treat yesterday. A rare treat. Did you guys like the analyst team takeover?
Dude, yesterday? I loved it. And granted, my internet was going in and out on the train, but the parts that I got, I loved it.
Yeah. We were having fun. Days like that where you guys leave me all alone, we're gonna try new things.
Yeah, for sure.
All right. So hit me some state of the markets. I got some charts. Let's dive in.
Okay. Fine. Yeah, we'll do state of the markets, and then we'll do Kenny real fast, and then we'll do Eddy Elfenbein.
I need 3 minutes.
Okay.
So before we hit the stock charts, US 10-year yield. What is driving this action? Finally, some sort of move with momentum, downside momentum, from the bond market. Laugh about how volatility's been, absolutely dead for equities. It's been that way for bonds too for a while. Now rates absolutely, taking out this key level. This trend line on the right-hand side of the chart is just connecting all the year-to-date troughs, right? So that trend line's been intact and has acted as support a couple times along the way this year, no longer. Also, when you zoom out, this was a huge key high, right around 4.25, 4.25, October of 2022, right? Back below that level. So while we're still in a broader range, we're now moving to the lower half of that range, right? So pressure on interest rates, risk assets probably doing better. Now, look to the banks. We're seeing it. Look at the last 3 candles. You're not going to be able to see it on my chart, but if you're following along at home, look at the last 3 candles in something like KRE, including today's pre-market stick. It was Powell's comments about cuts probably coming sooner, and now it's the inflation stuff today. You're seeing other groups like home builders work as well, right? Real estate starting to work. All the interest rate sensitive stuff telling us
China.
What?
China.
Look at emerging markets. Yeah, emerging markets. Right? More general. This is the stock market telling us the catalyst here for this move is really bonds and what's going on with interest rates. Because you see those interest rate sensitive groups moving the most, right? Or talking the loudest. XLF. This is the next sector. It's been all about tech, riding the leaders. XLF is going to be a great place to be in the back half of the year. We're getting that confirmation just these past couple of days. So when you look at what's going to drive this strength, it's going to be the big 6 banks. So if you look at the custom index that we've made, this is just equally weighting all the largest banks in the US. Fresh breakout, right? XLF already well above its pre-financial crisis highs. Big banks are about to do that. They are the largest weights. They're going to drive XLF higher, and they're probably going to be some of the best vehicles to express a bullish thesis on financials. Charts. Morgan Stanley, monster.com bubble base, breaking out right now. Love this one over longer time frames, right? Just because of the monster multi-decade base. Next. Citigroup, primary trend reversals in. It's been in since the 50s, right? First target already hit. Going to continue climbing up the right-hand side of that base and probably looks more like its peers soon, back above those old highs. Next. Wells Fargo, multi-year base breakout, almost a decade-long base breakout here, right? I've tested this level time and time and time again. I think we're going now. 60 is the level. Bank of America. This is a fresh base breakout, right? New uptrend underway. We're above those pivot highs from late 2022. Path of least resistance, higher for Bank of America. Next. This one looks as good as any of them. This one looks This looks the most like JP Morgan, right? So Goldman Sachs trading at new all-time highs. And then last one, and we're going to talk about all the largest components in XLF. Got to talk about Berkshire. This thing is coiled up and it looks just like super micro.
How to do it.
Coming off a monster move late last year. This one we think breaks out higher too. All of these stocks together drive XLF higher. We think finance is a good place to be. Kenny Glick.
Great stuff. We're running behind schedule. We're bringing Kenny on for like 2 minutes, and then we're bringing Eddie on. Let's go.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny, can you hear me?
What's up, buddy?
There you go.
Yeah, I was just hitting the inhaler. I was short the cues. I just covered actually because I was having an anxiety attack.
So your video last night on the Twitter, fantastic. Can you tell me what inspired that little pep talk?
Because people in my room are talking nonsense,
Like
and
what?
people are still debating whether or not this market is. If people still talking about the crash and corrections, I'm gonna still crush you because I'm the real bear here.
Yeah,
Take
right.
it from me, people. Shorting doesn't work. Okay, as much as I shorted the Qs because we just got the fade, but you cannot stay short this market for any extended period of time. If
Yep.
UVXY for some reason goes green today, that'll change the game. But man, it's an impossible market to try to stay short. And again, those trades I've been explaining in the morning about buying the dip on the QQQ dailies, it worked again. Those were 40-cent options. They went to about 220. So it's been a pretty awesome trade to stick with.
So ultimately, what we're talking about is Kenny was ranting about basically, are you crazy? You can't bet against the biggest, baddest companies in the world. The Qs are just a steady drip higher like every day because look what's in them.
Right.
I loved it. I thought it was
Yeah.
so good. If you're not on board now,
And I'm ranting. Most of my rants are because of past pain. These
Are
videos
your
to
rants
me-
directed at yourself? They are.
Yes,
Yeah.
yes. I am angry at myself for what
Yes.
I've done, and I'm still mad about trades I did in '96. So I have this bottled up rage, and especially as a shorter, I'm such a reluctant bull right now. But I hear you mentioning Jumama, my
Oh, yeah.
baby, right? So
Yeah.
as long as when we're in this bull move, that's when you get your $7 stocks going at 12. And the other nonsense, again, there's always a $2 stock that rips to 10 every morning, but you just got to be careful of those. QURE turned into a monster as well. So, but I'd rather go looking at the Pepsi, the Delta Airlines, the ConAgra today, and the Pfizer because those are the real stocks.
Now, did I
Yeah.
hear from you that the Sound Hound is back? Because this chart looks phenomenal. Like
Yeah,
across
that
time.
was yesterday. Yeah, you want to see something, and again, this is what makes better traders. It's
Crazy.
it's about revisiting an idea.
Yeah.
The pre-market. I don't like buying into news, okay, but that's the catalyst. So the news was kind of, I got excited at the open, and it kind of faded, but it never broke the pre-market lows. But I wound up saying, you know what, I really hate this stock. I'm gonna just dump it. But then here's your VWAP. There's your new high. So back above the VWAP, back above the high, and then it broke the pre-market highs. I got back in on this candle, and I wish I would have stayed in it all day. But look at the trend that forms when these stocks come back. Again, they're heavily shorted, and again, when the catalyst hits, the shorts have to cover. The longs get excited. The money gets divided. Now, again, we can start singing songs. So this one's in play again today. I keep an eye on it, but normally I'll go back. We got earnings season finally starting.
It's here.
You're talking about the banks. That's tomorrow morning. So very excited for that. You got, I think, the Bank of America, Citibank, JP Morgan. So we're off to the races. It's going to be very exciking.
It looks like
Right.
the banks just had a phenomenal earnings season these last 3 days. That's what the charts look like.
Heyo.
Right. And I think that's why again, as a shorter, I'm looking for what we just witnessed in the QQQ. So give me a gap up, right? Give me everybody's excited, and then give me a fade that breaks the VWAP, and I could short something. And now the battle is on. So the shorts had their 3 minutes because that's basically all we get. I mean, if you look at the charts, we've had a collective maybe 2 hours of selling since April 20th. No joke. I sit here and stare at these screens all day. We do not sell off for more than 7-minute increments. So here, you can make money shorting, but you got to remember that it's going to be short-lived, and you better be covering and going long because this has been the trade that's worked every day pretty much since April 20th.
That's it.
I love that.
That's it right there.
Bid. Kenny, you might have some opportunities in some of these banks, right? Because they're already overbought. They've run up, and they got earnings tomorrow and early next week.
Right.
These stocks shouldn't be up more than 5%, even on a good earnings report, the big banks. But you might get some froth there over the short term.
That's what I'm hoping for. Usually the Goldman Sachs is a good fader. They usually gap. If they gapped up big, they usually give it back. And the same, if they gap them down, they generally find the buyers. But I'm with you. I think we're going to get some fades, and that's my trade. The fade is my trade, and inevitably, if some of those become full-blown reversals, that tends to spread. Maybe the volatility indexes will start to wake up, and we could have a sell-off that lasts for more than 7 minutes. I know.
Kenny, if you ain't fading, you're in trade, and that's all there is to it.
I love that saying. Yeah.
Yeah.
So, so far the fade on the Qs have worked. We're already back in the green. Obviously, you cannot stay short the Qs. But we did it again. It worked. But I'm going to go back to looking at those the ConAgras and Costco's in play also. If you guys like the bigger stocks, here's the Costco. It's fading away a little bit from the big move already. But again, starting with the banks tomorrow, it's going to be very exciting, and I can't wait to see what happens.
Thanks, Kenny.
I'll see you in the room, guys. Be careful out
there. Oh, sorry, I cut you off there at the end. All right, now from Kenny to Eddy Elfenbein from Crossing Wall Street. Been on the show a couple times now, and he always you know what? It's funny that Eddy's on today. Last time he was on, I think we were talking about WD-40, right? I think so. I think that was the last time. The stock is up 11% this morning in the pre-market.
Yeah, I saw that. What was the news there?
I don't even know. I just showed up, man. I just got here. Anyway, let's bring Eddy on. Talk about it.
Up 10% on earnings.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Eddy Elfenbein, how are you, my friend?
Great. Good morning. How are you guys?
So how is this current bull market treating you? What's on your mind? Day like today is always nice.
I mean, God, this is just relentless. It's going to be 7 days in a row. I think 10 of the last 11 days have been up. A lot of this big cap tech, the QQQ has just been on fire. Yep. I don't think we've had a big down day for now over 2 months. I hate using the word Goldilocks, but nothing else really comes to mind.
Well, Kenny was just on the show a minute ago before you saying the exact same thing. Off of that reversal low in late April, there's been a relentless bid. Dips have not just been bought immediately, but they've been super shallow. And yeah, you can see it.
Yeah. Yeah, there's been the bears have been just completely clobbered. Every time you think there's an opening, it immediately shuts the door on them.
Yep.
And then also this morning, you just said a couple minutes ago, the inflation news broke. And we actually have deflation, at least on the headline rate. So it looks like things are going according to plan from the Federal Reserve as well. So everything is just a weird market. I mean, it's so focused on these really, really large companies.
Yeah, the past couple of days too, the interest rate sensitive stuff has been playing a lot of catch up, like the banks and the home builders, because Powell came out and he made comments about, yeah, maybe we can get a rate hike sooner than you think. And then the CPI came out the next day, basically confirming what he said.
Right. I think rate cut sooner than you think.
Yeah, I'm sorry. A cut sooner than you think. So yeah, go ahead.
I just looked briefly. I saw a lot of those interest rate sectors seem to be doing well pre-market, particularly the REITs gapping up.
Yep.
A lot of, shall we say, lower quality names gapping up this morning.
Up,
absolutely.
Right. Tough trades with that.
Mm-hmm.
Bitcoin. How do Eddy Elfenbein stocks do? Crossing Wall Street stocks do with lower interest rates?
Let me say right now, this has not been a good time for a lot of my stocks. Not doing poorly, but we're not just riding those waves, those winds right up. So we're doing, we're bouncing along. We're getting to new highs, but we're nowhere near where the rest of the market is going. So it's just the higher quality names have been cycling out for the last 2 months. I'm not overly worried about it, but that's how dealing with the market is dealing with cycles. And sometimes you get something that's it does no wrong and it does no right. But right. But back to your questions, I'm all for lower rates. I think will be particularly good for us, particularly a lot of good for value names. That's how the market works. It's a read of risk, looking at long-term interest rates.
Right.
That's really what it comes down to.
I think you're being modest. What you could say is you don't own the speculative ones, the junky stuff. So you're not going to get this crazy bid from the bond market because you own quality stocks. When I'm looking through a lot of the names now, I see like a lot of recession-proof type businesses. Is that done intentionally or does it just happen because you're looking?
Yeah, I mean, I didn't never make a macro call and say this
Yeah.
is what I think the market's going to do. I think it sort of works out that way because I look for evergreen companies, and those sort of will do well in good times or bad. I saw ICE that just got to a new high. I think Moody's is at a new high as well. So you even within the buy list, you'll see names that will prosper really no matter what the environment. I love companies like that.
Yeah, so ICE looks incredible. Moody's also. I mean, financials are just so hot. Like I keep talking about the banks, but capital markets and broker dealers, they've been hot.
Yeah, and by the way, so tomorrow we'll get kind of that unofficial beginning. A lot of those big banks will be reporting tomorrow morning. Be interesting what they have to say. I think it'll be pretty good results we're going to be hearing.
Seems like the market's excited about something.
Uh-huh.
So,
now, can I add one caveat? Is I don't think the commercial real estate story is over. The problem is it's kind of, with the summertime, it's like a shark in the water. You don't know exactly where the problem is until you find out about it. And that's just one of the problems of banking. I don't know exactly where this might strike, but I get the feeling this story is not over.
But isn't the general consensus that it would be like the smaller regionals or even that?
But again, you don't know who's exposed to it.
Yeah,
that's right.
Yeah, and therein lies the rub of financials. You don't know until too late.
Exactly. You don't know who's naked until the tide goes out.
Yeah. Do you own anything that touches that space? Do you own any real estate or any of the regionals?
No, I do not.
All right, what do you like what do you like right now? That's straight on the sheets.
WD-40?
That's a good company. I like WD-40. I think
earnings today or
last
night.
They're up big.
Yeah.
I think my idea is that they should merge with duct tape to have the ultimate do everything business. If you have WD-40 and duct tape.
What's duct tape? Is that who owns that?
I'm just kidding.
That's hilarious.
But it's the idea of any handyman. The two indispensables are duct tape and WD-40. But I think there's one smaller company I like a lot, which is Miller Industries, which has done very well this year. Had a recent pullback of about 10% at MLR, Miller Industries.
This is the tow truck company.
Yeah, love these guys. Nobody follows it. Wonderful turnaround story, really putting up strong numbers each quarter, and unusually weak over the past couple weeks. So I think there's and it's going for probably about 10 times earnings. So
nice little pullback over the past few months. Absolutely.
I like Otis Elevator, neat little company. They usually do very well with earnings, and they'll be reporting within the next 2 weeks or so. I'm a big fan of Hershey. Good recession resistant stock. They got hit hard by the massive jump in cocoa prices. They were dealing with some weather problems in Africa. I think that will revert and eventually take care of itself. Wonderful company. It's done hugely well over the past several years.
And how about Intuit? This one's not super cheap, is it? I mean, this is
no.
This a higher multiple name.
Yeah, it is. So I'm not, I'll get into that tech space. I'm not completely allergic to it. Intuit, it owns amazing franchises, TurboTax, MailChimp, several others. The latest story, well, they just announced a small round of layoffs. Intuit does. They actually said they're aiming to rehire those people at some point. And also the other news is that the IRS coming out with their own in-house version of TurboTax.
Really?
That's going to be, they sort of experimented with that.
It's like we've heard this before, Eddie. I don't know.
Yeah, I know. The idea that it's gonna erase TurboTax is, I think that's really getting ahead of itself.
This is funny. I haven't heard about this yet. I'll have to talk to my dad about it. But as somebody who used to prepare taxes, I would surmise that whatever platform or software they think that they're going to put out, people aren't going to use it because it's going to be terrible. Because most things done by the government are really bad, especially the IRS.
Well, and the great thing about Intuit is you're profiting off the complexity of the U.S. tax code. So at one point you have the government making taxes more complicated, and then you have another arm trying to make it easier for individuals to run. But I'm not such a big fan of the government being able to solve these problems for people.
TurboTax is great, and QuickBooks too.
That's right, QuickBooks as well. Yes,
QuickBooks is crucial. It's crucial.
Yeah. All right. What else?
Oh boy. Let's see. Love Aflac, the insurance company. Every time you think it's petered out, it pops up again. Wonderful, company that's always got a space in your portfolio.
Yeah.
Trying to think off the cuff. Another company that's done poorly recently is Silgan, SLGN, and it's a container company. One of these, businesses that will, I think, always do well. And they've been on the outs. It's really not the kind of company that people want to own in a NVIDIA world. But I don't see that one going away. And I like to see it when it's had a rough stretch. So if you're looking for value names, something that may be going a little bit underpriced, that's a good name to look at. It's SLGN.
So metal food containers, like used to transport.
Exactly. Yeah. And it's one of these things you don't think about it till you realize how ubiquitous it is. It touches so many different industries, so many different companies.
A new one I see on here, I think it's new. I haven't seen it. McGrath Rent Corp.
Yeah, no. So they're in the middle of being of a buyout. So they're by Will Scott, WSC, and there's been some back and forth on that. I'm not exactly sure where that's resolved, but it looks like that buyout will be effectuated soon. By the way, it's they make modular buildings for construction sites. So it's a neat little business, but right after the new year, there was the buyout offer from Will Scott, which is WSC.
Eddie, do you ever take stock of your portfolio or of your buy list from a sector or an industry exposure point of view, or do you say I've got too much financials, or not really?
No, not really. I don't do that. Sometimes I'll try to keep watch so I don't get too heavily weighted in a certain area. But a lot of times, I don't have any energy stocks, and people say, "Is this your view on OPEC and geopolitics?" No, I just didn't see any companies. Sometimes I like a lot of smaller industrial companies, so I'll try to watch myself that I don't go overboard on that. Also, a lot of healthcare companies I really like. Big fan of Stryker, and I try to make sure I don't go overboard on that. So you don't want to be too weighted to it. But basically, I go wherever I think there's a great bargain.
Eddie, the people who watch this show and read our research are used to us saying we want to buy above this level or buy this breakout or on strength above this. The way you do this is a little bit different. You're buying below. Can you talk to us how that works?
Yeah, I mean, I'm looking. I have a watch list of about 80 names I can consider superior companies with a very strong market niche, companies with very strong pricing power. Just high quality names. And within that universe, I look for companies that I think maybe for some transient reason have drifted down and open to a good buy price. I'll tell you something interesting for people who are more active investors. I've found that the best time when one of my stocks does very well, it's usually the second or third year that I've owned it. So I'm not riding those, those gales upward. And a lot of times when I add a new stock, it just flounders around for a while. And then about 18 months in, suddenly it'll start gapping up.
But you don't mind waiting?
Don't mind at all. Don't mind at all.
You're getting in early. It's probably a primary downtrend at the time. It's taking time. And then eventually a reversal, stock enters a new uptrend, and you're already in at a low price.
Exactly. That exactly happened with Miller Industries. It was getting crushed, and the painful part is holding through it. But I think if you're patient, and the fundamentals are working for you, that's a great way to invest.
Yeah, that's a really good. Harmander. That's a great question, Steve, because I struggle with both of those things. I struggle with doing what you guys do, and also doing what I did. There's drawbacks. There's no right way.
No, exactly.
Right.
If there were a perfect way, that would be easier. And by the way, what you're talking about, it also applies to selling. It's so obvious that you think, well, selling at a recent high is good. Not necessarily. That's your brain is sort of fooling you. I always want to see not until I see a problem with the fundamentals deteriorate. But a lot of times, one of the most basic rules of the market is when there's a strong trend going, just step out of its way and let it run its course. You always think, oh, it can't go anymore. Just like the past few days, it always will find that way to keep going. The market has a mind of its own. It's not thinking about what we're thinking.
It doesn't make sense, Eddie.
I know. My models say this shouldn't be happening, but yet it's happening. That's one of the things, that there's something inherently just not rational to a lot of the stock market. And we try to overlay these rules and these numbers and everything, and the market just doesn't care what we think.
Throw up the CWS chart. CWS looks ready to rip, Josh says. Look at this thing.
So next, we're going to be celebrating our 8th birthday coming up in September. So if for people who don't know, it's 25 stocks. We trade 5 stocks each year, equally weight those 25 names. And this is how it's been going for the last nearly 8 years. So we've had, up until about a year ago, we were leading the market. I should say that our risk, the volatility, the beta is significantly less than the market throughout,
But explain that. This isn't a bad fund to hold through a bear market, right?
Exactly. So, a lot of times we will say, well, yeah, it's not up like QQQ, and that's right. But that's not what we're trying to do. We're trying to get a set and forget fund that pays that follows high quality stocks. So this is a good example of the market where we're not going to perform as well. By the way, we're not down. I mean, go back to October. We've had a nice run. We've had recent all-time high. We just had it yesterday, all-time AUM high. So the fund is about 155 million. Thank you. So it's 155 million. So we've been going strong for 8 years. And for guys, if you're looking for something to diversify in a higher risk, low volatility name, give CWS a look over.
Yeah, I mean, you could see the performance here, and then just looked at 2022. You crushed the S&P.
Oh, crushed it, yeah. And that was basically the opposite market of what we're having right now. But that was one of the best relative strength years we've ever had.
I love it, Eddie.
I'm curious. Then, did you see a ton of flows in 23? Inflows?
We always get this sort of steady inflow. We don't get these massive inflows. We had earlier this year or late last year, we had one when Josh Brown said very nice things about the fund, and then we had some really, really big days. But no, it's more like steady inflows. And by the way, one of the things that's been impressive about it is that we haven't had those big outflows, even during COVID. So it's a lot of that people are invested in the philosophy of the fund. So even in the history of the fund, we've never had these big outflows that you see. That's just the ETF industry. If you're in, high yield, you're just going to get these massive inflows. And then when the sector turns bad, you'll get these massive outflows. We really haven't had that in the history of the fund.
That means that you're finding the right kind of investor for you.
Yeah.
It's a perfect match.
We're trying to serve. We're not trying to be all things to all people. We're trying to get people who are, it's a very particular and every once in a while there'll be some article or Barron's criticized us, and they're criticizing us for not doing something we're not trying to do. So I don't get overly worried about that.
No, this is something you want to tuck away in your IRA and let Eddie pick you some stocks for for the next couple of decades.
And they're public, so if you want to do, you want to have your own spin on it, go for it.
Yeah, awesome. Bill says Eddie is our best guest, by the way.
Yeah.
So, awesome. This has been great, Eddie. Always a pleasure to talk to you. Appreciate you coming on. I know we ran a couple minutes late, but appreciate your time and congratulations on the fund, on the performance, on the AUM, and keep on keeping on.
Great, thank you guys.
Thanks.
All right. I'm surprised he said they didn't get it. Usually you get like performance chasers, especially after the calendar turns, because they look at what did best the prior year.
Right.
Interesting.
Probably better that way. And then the JB effect, always nice.
Always helps.
Always nice. He's just so refreshing to talk to. Also, just so generous with his knowledge, right? He'll sit there and just talk about any of these holdings and why he's in them and what they do.
Yeah.
And it's different too. It's different from all of us talking about charts and candlesticks and lines and up and down and talk about little fundamentals every now and then.
Oh, it's good. It's good. All right, it's 9:29. We got a lot of things moving in the pre-market this morning.
Yeah, I got a lot of stuff to do here. I got stuff to do here in a minute, Spencer.
What kind of stuff?
Well, it's 9:30. You want to hit the news quick?
Yeah, there's a ton of movement. I've been like banging my head against the wall for the last like 3 weeks because there hasn't been a ton of movement in the overnight sessions, and there's a lot going on today. So we have Delta. We have that Delta chart somewhere. Delta just reported record revenues, but that just ain't good enough, folks. So the expectations are actually below. Sorry, the numbers were below expectations on the EPS, and their guidance was, call it, lukewarm. So we're down 8%. Delta Airlines, and remember, we always talk about Delta as being like I don't know if it's the bellwether, but it's definitely the best. It's the best. It's the best in show for the airlines.
Yeah.
So, record revenues, record air travel, but they're all trying to catch up and get more flights in the air and get more premium seats because business class is more profitable, and it's a hard group to be in right now. So Wall Street's reaction kind of would tell you all you need to know.
If your best stock looks like this, it's not really a group we're interested in.
Yeah.
And I will, fine, asterisk, SkyWest looks fantastic, but that's like a $2 billion stock.
A blue ribbon turd is still a turd. That is right, Peter. Mm-hmm. Very good. Mm-hmm. I like that.
MicroStrategy stock split. The people are not going to be patient waiting for you to bring this one up. Okay. Everybody wants to know, dude, this is one of the most irrational things that happens almost every time in the stock market.
But I don't remember it happening before like 4 or 5 years ago.
Spencer, you're wrong.
Okay,
Sean,
fine. I'm wrong.
Well, no, listen, the reason I know this is because Sean has told me stories from, I guess, early 2000s. Let's get him on so that he could tell it. Motley Fool used to write a newsletter just about splits and running stock splits that were coming, because it's always worked this way. The mechanics of it don't make sense, right? Because the company doesn't get cheaper or anything like that. There's nothing changes fundamentally. It just goes from $1,000 or $1,300 to $130. Alfonso made a funny joke. I hope we have the chart. It's going back to where we first started buying it in 2022.
That's hilarious.
But at 8 o'clock, this news hit the wire. And just go look at a 1 minute chart of MicroStrategy.
Oh, I see it. By the way, I love that high in MicroStrategy, 1999.99. Love it.
Brant, you're right. I'll get the chart, but crazy enough, they ended up not being tops again. They ended up not being tops in the homies. It's been a good pattern for us this year.
All right. Do we have a Pepsi chart? Speaking of consumer staples like Hershey and slow-moving stocks that are on Eddie's list, this is one of those. So a a miss on the top, a beat on the bottom line, and their guidance was the same as previously stated this morning. So I actually don't know what we're doing this morning. Okay, we're down 2%, but we're off the lows.
The whole market is ripping, and you're bringing me low volatility, high quality blue chips that are
high quality, baby.
on a day where the whole market is up. All the crappy ARC stocks are up.
All
and
right.
you're talking about the two that are down.
All right, you want to talk about what? QuantumScape, which is up 33%. I swear, I was just thinking about QuantumScape like 2 days ago.
I'm gonna guess this looks like an EV stock.
It's EV charging. It's like EV infrastructure. And I swear I forgot about this stock, and it popped into my head like on like Monday, and I was like, whatever happened to that QS? And I pulled it up, and I was like, oh yeah, that'll do it. And then here we are, like 3 days later, and they do a thing with Volkswagen. I think that's the news this morning. No, the news is they announced an agreement with PowerCo to industrialize solid-state batteries. So yeah, that's Volkswagen. That's PowerCo. So yeah, they're doing a thing with Volkswagen, and it's up 30% here today. Like, just thinking about this. Anyway,
it's that kind of market. Like Kenny keeps pointing that out, right? This is a press release market. They're running these things.
Yeah,
thing.
That's true. This is a press release market, and also this is like a buy everything is not the right word, but this is like buy. You know what you do? This is what you do. You Google ARKK Holdings, and you go look at what's in ARK, and you go down the list, and if it's not up, red flag. Right?
Right, Spencer. You're right. Yep.
This is the kind of market for that, and there are some things that are not like Zoom. Well, actually, no. Now it's up off the open, but So if your high growth stock is not up now, what are you doing? Right? That's what I got to say about that. And I haven't looked enough about, like, I don't really know what the meme coins are doing today. I haven't had time to look at that or anything. I'm just talking about just in the stock market, nothing else. But you can just see in the pre-market movers list what's moving, what's up, and it's all high beta. It's a lot of tech, a lot of non-profitable tech, a lot of moonshots, a lot of things that are in 80, 90% drawdowns that are up 7, 8, 9% today. Sunrun, right? We talked about SoundHound.
Is Run going again?
Redfin's up 9%.
I don't know names. I own a lot, but you never own enough on a day like today.
What, of Redfin?
Of everything. It's impossible to own enough on a day like today, right?
Restoration Hardware is up 6%. I mean,
listen, I have a story to tell.
Xpeng EVs, baby, let's go.
Throw up this chart of the Russell 2000. Let's talk about this because it's important. We mentioned it. I think the chart really helps. Russell 2000 peaked in mid-May, and entered into this little coily looking triangle pattern, really right above or right at a key level. If you say, okay, 200 is the level in IWM, right? Just zoom out a little bit, you'll see why. Or 2000 in the index itself, the Russell 2000, right there, chopping around, coiling since May. Volatility measured by Bollinger Bands, 2 standard deviations, dropped to its lowest level since just before COVID, when the market absolutely collapsed. You see that momentum to the downside? Last time volatility contracted to such a tight level.
Yeah.
Now we're back there. And like we were talking about.
Okay. I mean, that was an exogenous event, but yes, point taken.
It wasn't exogenous before, right? When the bands contracted. Did the Russell 2000 know about the COVID back in late 2019?
It's sure.
Right? So I get what you're saying. Out of it, it was an unlikely catalyst. But when you get a band squeeze like this, you get this kind of volatility contraction, we don't know what direction that volatility resolves itself in, right? Because then you'll get volatility expansion out of the range, either up or down. Now, we have tools that can help us kind of make a good judgment call on what direction it might be. For example, in a bull market, when everything is completing a reversal pattern that looks just like the one that's shaping up in the Russell 2000, we could say something to ourselves like, if all the rest of these were primary trend reversals and valid bearish to bullish rounding bottom patterns, then the Russell 2000 probably going to be a reversal pattern too. So maybe this tight range for the past couple months, better likelihood that it resolves up and not down. And then we could position ourselves appropriately, right? Making those forecast calls. Today, you're getting a massive resolution, decisive move out of this volatility range in small caps. This base is now resolving higher. The path of least resistance for the worst stocks in the United States is now higher. It's a bull market, my friends. It's a bull market.
I'm waiting. I've been waiting. Not that I have like skin in the game here, but been waiting for this one to shake out. So
this is go time.
Okay.
Smalls, mids, more cyclical stuff, the financials, right? The economy stocks, the homies.
All right. I'm also very underweight small caps, but who isn't? So
which has been the right thing to do. And now you could change.
Yep. All right. You asked for Sean. Sean has been summoned. Sean is here.
Yes.
Let's get him on.
Boy, Spencer, the crowd is giving you some guff this morning. What's going on?
I know. Look. I'm flustered today. Okay, I've been home for what 40 minutes. Okay, I've been up since 5 o'clock in the morning. I took a train this morning from Baltimore to New Jersey. I was out not that late. Very impressed with how not late of night it was. Very pleased by that actually. But
did you guys go to the ball game last night?
Yeah, until it started downpouring on us, and then we left.
Oh.
But
all right, listen. The crowd is dying to know about the history of stock splits.
Yes.
Spencer, this is not a new phenomenon. In fact,
I stand corrected.
Some of you know I've been a trader since 1998. That's when I started trading. And the very first subscription service I ever subscribed to, and this was in 1998 when I was a brand new trader, was a service called the Right Line Split Report. And all it talked about was how to buy options in stocks that they thought were going to be the next to announce a stock split. And that was the whole game. And it was great. I made a bunch of money back then in the late 90s. Like every time, I mean, that was the game. It was like every week there were new stocks announcing stock splits. We were at the crazy .com bull market was going on at the time. And every week there was a new tech company or any company really announcing a split. And as Strazza said, it makes absolutely no sense for a company to increase in value just because they announce a stock split. But the market's made of humans and humans are stupid and they think that's a bullish thing. And boy, there were lots of great plays. I don't know if the effect is as effective today. It seems to be still, but yeah, it was a weekly basis. You'd get 3, 4, 5 names every week that were announcing splits, and it was crazy.
Did you look at the 1 minute chart? Like the MicroStrategy thing, it hits the wire, the stock's up 8%.
Oh, I believe it. I don't need to look at it. I know. Especially a name like that.
Can I posit that 99.99% of the time stock splits don't increase the value of the company, but in that sliver of examples
of the time.
I'm saying if they split to like get into an index, for example, right?
Okay.
Like that doesn't increase the value of the company, but it leads to some probable inflows, some forced buying.
It can make the stock price go up.
Yeah.
Yeah. Look, I'm a fan of stock splits in general. I think companies should split their stock. If your stock's over $100, I think every company above $100 should split their stock. But that's just me thinking as a trader,
as an options trader.
Right.
And as GE has shown us, reverse splits ain't always so bad either.
Great idea in the chat. I don't know why we haven't thought of this. We easily do this. Alfonso and Sam, if you're listening, we're going to make a universe of stocks that have risen dramatically over, I don't know, trailing 12-month time frame and are trading, I don't know, over $500. And then we'll scan them for potential stock splits.
All right, now soliciting names for the scan and go.
I mean, there's a lot of big ones. This bull markets do this to stocks, right? Like the Service Nows of the world. There's got to be splits coming for these
Lots
guys.
of
They
big
want to
ones.
be in the Dow one day.
Any stock, I mean, look, I said I think every stock above $100 should be split, but certainly above like 500. I mean, 500 is, come on, it's too much. They need to split. They need to split the SPY and the QQQ. Split those. Come on.
Yeah.
Could they do that?
Of course they could.
Yeah.
It's just a journal entry.
They wouldn't. They wouldn't.
Broadcom is trading at $1,700 a share. At the bear market lows, this was a $400 stock. This thing's gotten, way too high of a share price. I got to split this. Okay.
All right. I told Fonz in the back channel here, we need to talk about Wheaton. WPM. Do you see what that's doing today?
This is the third time I've heard about this stock this week.
Oh, man. Fonzie hit us with a stale chart that doesn't even show today's candle. Boo.
Oh, Sean, it's 13 minutes into the day, and it's faded a little bit. But yes, the breakout is in the books, is what Sean is trying to say.
It's looks over like $60 right now, or at least last I looked. I don't see it right now. Let me pull it up.
58.50 now, but they got to stick it. They got to stick it, and it seems like they will. Interest rates are working.
Dude, so let's remind people why we liked this setup. This setup was in a name that is in a sector that we think the sector is going to attract a lot of rotational dollars, right? We think if this bull market has legs, it's going to need some sector rotation. And the metals space and the miner space is one of those sectors that will benefit from rotation. So that's checkbox number one. Checkbox number two is Wheaton Metals probably needs to play a little catch up to its peers. So you got a sector that should lead. You got a stock that is, a little behind its peers and can play some catch up. Those two things can create a powerful move. This was our thesis going in. I didn't think it would play out in 3 days since we got into it, but I mean, that's what's happening right now. It's pretty crazy.
Yeah, it looks good. And it's a sweet range breakout. Don't we?
Sweet range breakout.
Yeah. No, gold looks great. Silver looks great too. The way that we did the trade, how is it? We sold calls.
Hold on, let me pull it up. I want to make sure we got this right. Look, I have 24 trades on. Sometimes I don't remember all the details.
Yeah.
All right. We did a calendar spread. So we bought the January 65 calls. Those are the calls we wanted to own, right? We wanted to own the 65 calls, but when we put the trade on, Strazza, you and I were like, it might take a little while to get going. Yeah. We didn't know it was going to
3 days ago.
Yeah. We didn't know it was going to rip the way it's ripped the last 3 days, but look, we're still doing good here. We sold the September 65 calls against our January 65 calls just to give us a little cushion in case this thing takes a little bit longer to get going than we'd like it to. So far, it is not, but that's okay. I mean, we're still this is working greatly according to plan. No worries. If it gets to 65 before September expiration, then we'll just close the whole position now, and that's a calendar spread. We'll close the whole thing down. It'll be a profit. Might not be the profit we were hoping for, but it'll be a profit, and that's a first-class problem to have when you're closing a position because you're not having the type of profit you want to have. But that's a first-class problem. But our bet and our expectation is that those 65 calls in September will likely expire away worthless. Then we'll be left with those January 65 calls at a reduced cost. And hopefully at that point, the sky's the limit. We'll see.
Yeah.
And you know what? I'm looking at the intraday chart of WPM right now. And yeah, boy, it faded that open pretty quick. So, hey, I'm feeling pretty good about those short September calls. This is exactly what we were worried about. It's going to take its time, and that's okay.
All right, run the hot corner, Spencer.
Oh, okay. See what we got.
So hot right now.
Aztec Industries. This is Mario Gabelli and his family of funds all increased their stake from 7.25 to 8.75. It's a farm and heavy construction machinery stock, but it looks terrible. Throw up the chart, Fonz.
ASTE. ASTE, is that right?
It's like they're supporting this thing. They've been long. This is an old holding, but they just keep increasing their stake. Somebody's got to support it at these lows. Not something that we're interested in. Maybe you could play around with it if it's above this 27 level. Definitely a no touch below there. And then even if it holds, a lot of work to do before there's some sort of trend reversal on the path of least resistance is higher for this one. So it's a little bit quiet on the hot corner today, but we've had some fireworks lately. Had a lot of big filings lately.
Yeah, I just looked at. I assume this one might have been paying a nice dividend, but it doesn't. I mean, it has one, but it's not a lot.
Probably pretty small, isn't it? Is it small?
It is. Yeah. So,
listen, that Twist Biosciences, the Form 13 that we had, I guess, just a few days ago, or was it late last week? That chart looks better and better, and these are the kinds of stocks that you would expect to be doing well. You said, Spencer, go run a list of ARK stocks and get involved.
That's a favorite. That's one of the favorites right there.
I see the chat talking about ICE, buying the ICE breakout. And I heard you guys talking, you and Eddie talking about ICE. I mean, you gotta love exchange plays right here. I just read an article this morning. I mean, this isn't the U.S. market, but I read an article this morning about in India, the Nifty Bank stocks. Or they have an index, and you could trade options on the Nifty banks.
Yeah.
The options volume in daily options right now, like the daily expiration options or the weekly expiration options, is 221 times the regular monthly options expiration. 221 times more volume in daily options than in the regular monthly expiration options.
Well,
if you think about that,
it's incredible.
That's crazy.
I think India has like a strong day trading culture, right?
Oh, they absolutely do. I saw it firsthand when I was out there, for sure.
But Sean, this is huge because this is a brand new trend. It's going to be a mega trend. We're not going to trade less in the future. We're humans. We're idiots, right? We're going to trade more, and we're going to trade all the riskiest, craziest stuff. So there's going to be more and more zero DTEs. In America, they're already putting them on the biggest stocks, right? So that volume, which looks huge now, they just got started. This is a new thing.
Right. And you don't think that the exchanges are going to benefit from this mightily? You're crazy. I mean,
do you have SIBO in your long-term account then?
I should. I don't. I should.
That fits your criteria. They pay divvies, don't they?
Let's see. I'll tell you right now. They do. 1.3% yield.
That's on SIBO?
On SIBO, yeah.
I mean, that one looks a lot better too.
I mean, we've talked about ICE a lot, but we never bring up NASDAQ.
Yeah, that's a good point. I mean, they're winning every day.
That chart looks great.
NASDAQ wishes their chart looked like their index.
Yeah, well, yeah. That's kind of my point. Charts don't look the same.
That chart looks great. At least on a 1 year chart, looks great.
Yeah, all these non-top. That's SIBO too. We're gonna look back and say, yeah, of course that wasn't a top.
Hey, Dawson asked me how much of that trading volume. I assume you're asking me about the India trading volume. He says, how much is that retail? 10%, 1%? I don't know. The article I read did not delineate that. I could tell you in the U.S., the majority of the zero DTE option trading or the short-dated option trading is actually institutional. When it started, it was primarily retail. But as it's matured a little bit, institutions have gotten in heavy not because they're degenerate gamblers, but because they can more finely tune their event-specific risk on a daily basis using options and do it a hell of a lot cheaper with these daily expiration options. So you're seeing institutional flows driving the volumes, which is great. I mean, that's what you want.
That's ultimately what you want. Is you want the retail adoption or institutional adoption.
Yeah, that's what you want.
Yeah.
But I don't know about India. They didn't. The article I read did not mention it. Who's driving? I would suspect it's retail right now, but don't quote me on that. I have a 60% confidence in that answer.
Did we cover all the news today, Spencer? Did you want to read out?
Who's to say, really?
You've had a crazy morning, but I was calling Spencer, absolutely harassing him. He's stuck in traffic. He's like, there's nothing I can do.
Nothing I could do. I was trying to get home. Anyway, we made it. It was fun. I thought JC said he might call in. I guess he's not. I don't know.
Says a
Oh
lot.
wait, we missed Pfizer with the GLP-1 pill, but that move lasted about 5 minutes.
So you're going to hear the word deflation, right? You're hearing the deflation, not disinflation. All that means is that inflation is not growing at a falling rate. It's actually falling, right? So we got a negative number on inflation for, I think this is the first time in a while. So the month over month down 0.1%, expecting 0.1, ice cold. Ice cold.
I haven't,
ice cold.
I haven't looked like into that. I haven't like, you know, how it's broken down by basket. I haven't like looked into the basket or anything. I'd be very curious. I will look into that. I want to see where that deflation came from. Because as the chat was pointing out,
Shelter.
We all shop, we all spend money, we all know, right? I don't think anyone's seeing deflation in their lives.
I'm not
maybe
seeing
shelter,
anywhere.
maybe
because humans just think of inflation as grocery store and gas prices.
Yeah, there's a lot to that. You're right.
It's the things we spend money on every day.
And guess what the Fed thinks of inflation? As everything except the grocery store and gas prices.
Which is bullshit.
The things that you spend money on once a year or every few years, the big things. Yeah.
Funny
the
how that works.
Equipment, right? Yeah, interesting. All right.
All the big techs were lower pre-market and lower now. The great rotation, they will call this, maybe. Great rotation. Is that what's happening here, guys? Look at
Will somebody ping Kenny real quick and tell him time to close that short position in the Qs? You know, they're down a little bit, like $1 since the open. This is probably
I'm sure he's on it. Yeah.
Kenny, if you're watching, cover that short right now.
Sure he's on it. Yeah. All right.
Solar energy having a day. You're right, Spencer.
What is?
Solar energy. So a lot of these names are heavily shorted. SunPower, Sunrun, SunNova.
Yeah, man.
It's all Sun something. Sun anything right now, ripping, and they're all short squeeze candidates. We like Nova the best. Nova completing a little tactical base here. Nice move today. 9%. Yeah. It looks like just another day if you look at the chart. Things up 10%. You can barely tell.
I'm seeing a shit ton of new highs and 2 new lows. And I have a filter. What's my market cap filter? $1 billion. 2 new lows and a lot of new highs.
Yeah.
So 82 weeks. Sorry.
I can give you a read on the S&P 500 real quick just to see what that looks like. Of the 502 tickers listed in the S&P, it's really not that good. Now only 35 today.
Yeah.
Is that right? Yeah.
It can't be right.
Those are new 52-week highs, though, right? If I was saying advanced decline, we have... Yeah, there's plenty of red. There's about 400 advancers, so 4 out of 5 are up today. Solid.
Yeah, that sounds about right. All right, let's do recess.
Yeah, hit it.
All right, my recess is a request from the audience. We have a lot of viewers from all around the country. If we've got any viewers in Des Moines, Iowa, I'm flying there tonight. I'll be there for the weekend. I have no clue what goes on in Des Moines, Iowa, or even Iowa, the entire state. So if anyone has any restaurant recommendations, fun things to do for a couple of days in Des Moines, Iowa, hit me up. Hit me on Twitter. Options Sean,
I've got
that's
one.
me.
I've got one. I've been there, Sean.
What do you got?
Zombie Burger.
Zombie Burger. Is that a fast food place? Fast casual?
No, it's a almost a Halloween themed burger joint. It's not that dissimilar to like Shake Shack or Five Guys.
Wait a second. It's a year-round Halloween themed burger joint.
Yeah, pretty much.
Okay,
that was awesome.
Yeah, so I don't know how many locations there are if there's only one, but there is one in Des Moines that I went to and it was pretty good, honestly. So zombie burger. It's like a zombie themed restaurant. Yeah.
Okay. All right.
That's what I got for you.
Zombie burger. I'll file that one away.
I was there for a wedding 5 years ago. I wish I could remember what else we did.
Bush
The
Light
airport's really
corn
small.
cans. Okay, I'll look for that. Bush Light corn cans.
Oh man, I wish I had more time to think now.
Ethanol grain alcohol.
Wait,
Sounds like I'm in for a wild time.
When are you going, Sean?
I'm flying out there tonight after the market closes, and I'm just going to be there till Sunday. My son has a best friend who used to live in our neighborhood and moved out there last fall. So our family's going out to visit their family and have a good little time.
I got one more. The Iowa Tap Room. It's a brewery.
Okay.
Iowa Tap Room.
Iowa
Yep.
Tap Room.
That's what I got for you.
The one big bummer is, people know me. I'm a big Cubs fan, and the Cubs AAA affiliate is based in Des Moines. Unfortunately, they're out of town this weekend, which was a bummer. So totally would have went to an Iowa Cubs game.
Is that the Quad Cities?
No, they're in Des Moines.
Oh, sorry. That's
Iowa
something
Cubs
different.
are in
Never mind.
Des Moines.
All right.
Yep.
All right.
That's all I got.
I finally have a new show. We were talking about the lack of new good shows on. They're doing the Hard Knocks on the New York Giants this year.
Yeah, I haven't watched it yet, but I keep seeing clips. It looks very compelling.
Only 2 episodes are out. That show is it's just always been done really well, and it's cool to see what goes on in the front office, what the managers or GMs are doing with the coaches and making moves during the off season. And they were at the combine. Some guy broke the record for the 40-yard dash. That was awesome.
Yeah, it looks
You got
very
any
good.
Giants games in your got any Giants games that you're going to hit this season, Strazza? Anything on your radar?
I don't think so, but I honestly haven't checked yet.
I'm headed to Seattle to see the Bills play in Seattle in October. I'm pretty excited about that.
I haven't been to a game since it was New Year's Day 2022. So yeah, it's been a little bit now. They don't
haven't missed much.
Unlike your team, Sean, my team doesn't come down to Miami every year. I don't get that. It's a bummer.
It's too bad because that's usually a guaranteed win for the road team.
Yeah.
True.
We could say those things with no pushback today.
Yeah. All right. My recess is that Baltimore is a great town. If you haven't been to Baltimore, you should. I've been there twice in the last month now. Good time, good food, great ballpark.
Did you guys stay in the harbor?
I stayed downtown. Yeah, I wasn't not near the harbor, but downtown.
Nice.
And Brett Holmes took us to some hole in the wall Korean barbecue joint that was in the Wired territory. If you're familiar with that show, it's that part of town. It was very good, and good time was had. So
that's awesome.
Yeah.
Cool, man.
I've only been to Baltimore once. It was during a hurricane, so didn't get to experience too much of the city, but I liked what I saw.
Hurricane in Baltimore.
All right. We'll be back tomorrow with the full crew. Actually, no. I don't know if I'll be on the show tomorrow. True story.
You guys are killing me.
JC will be back tomorrow. I don't know if I'll be on the show. I'm supposed to go to the Catskills tonight, and the internet up there isn't the most reliable. I'll do my best.
Yeah.
We'll see.
I'm going golfing this afternoon. End the show.
All right. Options Jam session at noon. Chart request live at 1. I still don't know why that happened.
I love it.
All right. Have a good one, everyone.
I can't take no loss. I don't even know what it costs.